Hi, everyone, and good evening to all. Welcome to my research video here for Wednesday, November the 12th. It is 5 p.m. Eastern Standard Time. Market is closed. This is a research video, just giving you guys some market updates and no charts on this video here, okay? The technical analysis will be coming soon to a theater near you, probably within the next hour or so. So I'll try to knock out these two videos today and hopefully have them both out by the end of the evening. So I wanted to show this chart, and I've shown this chart before. Global reserve currencies since 1450. Portugal, 80 years, 1450 to 1530. 110 years for Spain between 1530 and 1640. Netherlands, France, Britain, and for the last 94 years, roughly since 1921, the 1920s period up until till present now, the US dollar has been the reserve currency of the world. Now, the reason why I show this chart is to show that no reserve currencies last forever. And so I wanted to, as always, all the links that you see here, all the links that I'll go over will be on the link below. So for more extensive read, and obviously if you want to watch the whole videos, you can always click on the link below and you'll find these, okay? But this is, again, Russia, China drops the US dollar for mutual trade. Now, I've been covering this for, since 2000, and I believe it's 2011. 2012, when China and Russia began putting the US dollar aside and doing business and contracting businesses between themselves without using the US dollar. It looks like things are accelerating now. After a meeting of the Asia Pacific Economic Cooperation Group, the dollar no longer has a place in trade between Russia and China. The two BRICS powerhouses will soon begin using their own currencies when trading between themselves, potentially hastening the decline of the US dollar as the world reserve currency. Okay? And BRICS, I've covered this before. For those of you who don't know what BRICS is, BRICS are the BRICS nations. B for Brazil, R for Russia, India, China, and S for South America. So these nations have contracted within themselves to do business without using the US dollar and putting the US dollar aside. So it does look like things are accelerating here. Again, the link for this video here, if you want to see the coverage, it's only a 3-minute long video. You should watch it, okay? And we have another here, this was from November 10th, roughly 2 days ago. Petrodollar panic. China signs currency swap deal with Qatar and Canada. The march of global de-dollarization continues. In the last few days, China has signed direct currency agreements with Canada, becoming the North America's first offshore RMB hub, which CBC reports. Analysts suggest could double, maybe even triple the level of Canadian trade between Canada and China, impacting the need for dollars. But that is not the week's biggest petrodollar precariousness news, as the Examiner reports a new chink in the petrodollar system was forged as China signed an agreement with Qatar to begin direct currency swaps between the two nations using the yuan, and establishing the foundations for new direct trade with OPEC nations in the very heart of the petrodollar system. As Black warns, it is happening with an increasing speed and frequency. So again, another great article. I urge you to click on this article here and read it through, okay? So it does look like a lot of nations are getting tired of the control or the inflation or the manipulation of the US dollar being the #1 debtor in the world. And by devaluing their dollars, they get to pay countries like China, which we have over $1 or $2 trillion in debt with China. We pay them with paper dollars that are worth less and less every day. So these guys are really getting fed up with this. And again, they are taking measures to protect themselves. Not to mention that China is looking to have over 8,000 tons of gold, which I think right now the U.S. is the #1 in gold holdings. China looking to beat the U.S. dollar within the next coming years. Okay. Another article here: October Silver Eagle sales best ever with 10 days remaining. This is from October 23rd. I was actually covering this in the beginning of October. I think when I covered it, it was at roughly 2 million sales of Silver Eagles for the month of October that the U.S. Mint had reported. And by the end of last month, we had a record sales of 5.7 million, almost 5.8, just short of 5.8 million ounces of silver. Record-breaking month. Only to be surpassed by January of 2013, where we sold 7 million ounces of silver at an average price of roughly $33. So the demand is definitely still there, as you can see, and the most important part being that as of early this month, on the 5th of this month of November, they had reported 1.2 million in sales, which was a very strong number for the first 5 days of November. Unfortunately, they ran out of silver. So definitely the interest in the precious metals is there. Unfortunately, you wouldn't know because of the paper value of the precious metals. But these, you'll realize that the premiums are going higher and so on. So, and I think on my last video, I also talked about backwardation in this precious metals market, especially on the gold in the gold market. Okay. So a lot of good things happening, a lot of silver right now being sold. And again, record-breaking month here, October of 2014, as far as Silver Eagle sales. Okay. Bank of America, 2 days ago, Bank of America, change your thinking on gold. Friday marked the end of a 4-year decline. That's a very bold statement. I don't know that I believe it. But then again, these guys, Bank of America is one of the big boys. They have great relationship with the Federal Reserve. So maybe these guys know something that we don't. I personally expected further decline. But the reason why, if you click on this article, the reason why he's saying that the bottom is in is because of this extremely bullish candle here that we have here. Okay. I wanted to get in on this. I know I told everyone that my prices of coming in here will be $10.50 for gold. Unfortunately, I wanted to do a short term there and come in and buy roughly at around $10.53. When we went up on Friday, it started declining that on Monday. And I wanted to get in at $11.43. Unfortunately, I was just shy of $3. Market ended up going to $11.46, and then it took back off. So a high, not a higher high, but saw a high of $11.73, and right now just trading sideways. It looks like we're building a little bit of a triangle, but again, we're not here to talk technicals, right? The technicals will be on the next video, but you can clearly see that we are building a triangle. If it breaks up to the upside, we could see a really nice reversal here on the precious metals market. Okay, so for a week ahead of Bank of America, Merrill Lynch, McNeil Curry is focused on the plight of the U.S. dollar, U.S. treasuries, and commodities, especially gold and oil. All of these markets, he warns, are showing signs of changes in trend. Most notably, Curry explains we are switching gears on gold from bearish to bullish. Friday's gains are just the beginning, he says. But again, you can clearly see here that, and I think I mentioned this on my last video also, anytime you have these bullish engulfing patterns, they're very positive. And you had this piercing pattern. It wasn't a bullish engulfing candle, but it was definitely a piercing pattern, and the market continued to go up higher. Anytime you have a bullish engulfing candle, kind of like what you see here, this candle This candle here engulfed all previous candles, the last 4 candles before it. Very positive. If you can get in here in the middle with a stop loss below it, you should be able to take this thing a little bit higher. Good risk to reward factor right there. Okay. Again, the technicals will be coming on the other one. And the last couple things that I wanted to show was this video, two short videos with Alan Greenspan. Alan Greenspan must be having a serious change of heart. He was the Fed chairman for the U.S. for the Federal Reserve. I don't know how many years. I think it was 14 or 15 years or so. But at any rate, in this interview, he talks about a gold standard and also talks about our current fiat system, which again, very interesting, his stance being that he's one of the guys that creates money out of thin air. So just listen to this here.
So then why do we need a central bank?
Well, the question is a very interesting one. We have at this particular stage a fiat money, which is essentially money printed by a government, and it's usually the central bank which is authorized to do so. Some mechanism has got to be in place that restricts the amount of money which is produced, either a gold standard or currency board or something of that nature, because unless you do that, all of history suggests that inflation will take hold with very deleterious effects on economic activity.
Now, you were a great admirer, in fact, an accolade of Ayn Rand, the great philosopher who believed that in the absolute most limited role that the government could play in people's lives. She probably wouldn't have been a fan of the Federal Reserve Board, would she?
Well, I don't know, because we never discussed that in particular. But I think she recognized that there are lots of institutions which we would be better without, but nonetheless probably require them if indeed society as a whole decides to do that. Remember, we live in a democratic society, and that compromise is the very essence of a democratic society, because if we're all individuals with different ideas and we want to live together, we have to do that. And there are numbers of us, myself included, who strongly believe that we did very well in the 1870 to 1914 period with an international gold standard.
So there you have it again. Greenspan having a change of heart. He actually stated that between 1870 to 1914, we had great economic development and we were in a gold standard. Actually, 1914, he says, and 1914 was the year that the Federal Reserve was created. Okay. The last video I wanted to show was, again, Alan Greenspan. This was just 2 weeks ago, October 29th, 2014, Council on Foreign Relations. Basically, just a debate with Alan Greenspan, and he's talking about the economy and the state of the economy and what he expects. Pretty long videos, about 50 minutes long. If you like economics, I guess you should tune into it. If you don't, then just tune into these 2 short clips that I'll show, where he talks about how he does not feel that the Federal Reserve can actually get out of quantitative easing with these low interest rates, and obviously the end of quantitative easing for now without quote turmoil. He didn't want to use the word crisis. So here it is.
Thank you.
The quick question, though, I mean, two questions. One is, given what you're saying about the magnitude of the task currently facing the Federal Reserve, and given that this has never been seen before, if you were a betting man today, and you have been trading the markets in the early parts of your career, what probability would you give to the Federal Reserve being able to exit these challenges without creating another financial crisis?
Well, let's leave the word crisis out.
Okay, extreme instability or volatility.
If I can use the substitute term turmoil.
Turmoil. Yep, turmoil would be good. We like turmoil.
I don't think it's possible.
You don't think it's possible?
No, I think that, remember we had that first tapering discussion, we got a very strong market response. And then we reassured everybody we have no remember, tapering is still of an agreement that the
So there it is again. If you want to tune into it, you can just click on the link below. And then this is the last part of the video.
central banks have made, European central banks, I believe, about
Where he talks about gold
allocating
here.
their gold sales, which occurred when gold prices were falling down, has been renewed this year with a statement that gold serves a very important place in monetary reserve. And the question is, why do central banks put money into an asset which has no rate of return, but cost of storage and insurance and everything else like that? Why are they doing that? If you look at the data, with a very few exceptions, all of the developed countries have gold reserves. Why?
I imagine right now it's because of a question mark hanging over the value of fiat currency or the credibility going forward.
Well, that's what I'm getting at. Every time you get some really serious question, the 50% of the gold price determination begins to move.
Right.
And I think it is fascinating. I don't know, is Ben Steele in the audience?
Yes.
There he is, okay. Before you read my book, go read Ben's book. The reason is you'll find it fascinating on exactly this issue, because here you had the ultimate test at the Mount Washington Hotel in 1944 of the real intellectual debate between those who wanted an international fiat currency, which was embodied in John Maynard Keynes' construct of a bancor, and he was there in 1944, holding forth with all of his prestige, but couldn't counter the fact that the United States dollar was convertible into gold, and that was the major draw. Everyone wanted America's gold, and I think that Ben really described that in extraordinarily useful terms as far as I can see. Anyway, thank you.
Right. Well, I'm sure with comments.
So again, there it is. Again, seems like Alan Greenspan has been having a change of heart. He likes gold, and basically suggested that it's an integral part of any economic structure. And as you saw from the previous clip here, previous clip right here, I mean, definitely believes that in a gold standard, and he definitely believes that gold is a true currency, one that no matter what would always stand the test of time. Okay, so I hope you guys like this video here, and I will be doing a technical analysis next, and look for that on your inbox. Okay, thanks, and have a great rest of the night. Bye bye.